Well, hello everyone, and welcome to the April version of the Ag Economic Dialogue sessions. We're glad you're viewing this with us today and or online on the recording sessions. With that, we do have three presentations today, and since there are three, if we go a little late and you have to jump off for a different meeting, that's fine. We'll have this recorded and be on our YouTube page so that you can view it there. Otherwise, with that, I will just turn it over to Dr. Diersen and let him kick off today's Outlook presentation conversation.
Here's the cattle situation. Just big picture. It's a time of year where we're at the tail end of some of the winter type of stuff, but we don't yet have new pasture and range conditions. There's things like a cattle on feed report that comes out after the market's closed today. So those are the kind of where we're at with the situation in terms of timing of some of the reports and things. Big picture, we've got cattle inventory. Here's just a U.S. snapshot of where the cattle are, just to show the darker states have more cattle. This is just for perspective. And you can see that Texas leads the way down there in the southern end of the continental United States with a large absolute number of cattle. And for the most part, the western half of the United States has had several years of more drought-like conditions that have improved, bringing some of the cattle numbers back as of the beginning of calendar year 2024. Now, normally these are the two sets of indicators that really paint kind of a big picture view of what's the situation look like for all cattle and feeder cattle in particular. This is feeder cattle supplies outside of feedlots. So if we see way over here in the bottom right, just over 24 million head of cattle that would be available to go on to feed or go into feedlots in 2024. Now, this number being as low as it is, you can see it's lower than it was in 2015. That means there's fewer feeder cattle out there, calves, non-replacement heifers that would be available to be replaced or put into feed. That's what's driving the predominant driver on the supply side behind higher calf prices and feeder cattle prices at this time. This number will roughly get updated after the cattle on feed report, but it just takes into account the slaughter that's happened January, February, March, and there's been nothing dramatic or unusual in terms of slaughter, so don't expect the general outlook for the feeder cattle supplies to change much here in the short run. It's how big is the calf crop going to be in 2024, and what will that eventually do, or will replacements start? The heifer replacement snapshot, which I also like to take. This is from January 1st again at the U.S. level, and you can see that the smallest number of beef replacement heifers in recent memory is there. So you really aren't going to have a bumper calf crop that's going to kind of fix the high price situation here. But just for perspective, you've got kind of the second year of a very, very, very low number of replacement heifers on hand. The cattle on feed situation, this is a little bit, this is as fresh as it gets. There will be a cattle on feed report today that's probably going to show a slight decrease in cattle on feed is the general expectation. But for the most part, we're moving into the time of year where you've got similar on feed situation to the 5-year average. So that's okay. The thing or the things that analysts and stuff are watching is the number on feed for a large number of days. So a couple of things going on. You've got more heifers on feed or relatively large number of heifers on feed, and they tend to be in the feedlot a little bit longer at times. And if you've placed lighter weight cattle in the feedlots, they can be on feed for a little bit longer. Or if you're just finishing the heavier weights, you can end up with cattle on feed a little bit longer. So this is the third month in a row. If this trend continues, this is one of the things sort of weighing on the fed cattle market, or that could weigh on the fed cattle market in terms of bringing a large number of animals that have been on feed for a long time to the market at one time. That's also shows up when we look at here, the cattle dress weights. So there's been relatively fewer cows slaughtered year to date, but this weight category or weight pattern tends to hold for all cattle and for steers and for heifers. So right here in the middle here, we've got this counter seasonal move for much higher slaughter weights or dress weights over the last 2 months. Normally, you'd expect to have seen weights declining as we go into the summer months, but this year it's really moved counter. So as corn has fallen in price and fewer cattle are expected, or fewer cattle are available for replacements, it's put some upward pressure on weights. So those weights mean even though slaughter volumes are down, you've got bigger cattle going through, resulting in stable or increased beef production from a week-to-week perspective. So that's sort of the fundamentally a driver right now in the market. The other one that's a positive thing is the amount of beef in cold storage, and this really holds across beef, pork, and to some extent poultry. Compared to the 5-year average, and especially compared to last year, there's less beef in coolers and within the supply chain or throughout the supply chain to supply the market. So if there would be a big run up in demand in the short run, it would really put some upward pressure on prices. And I'm not suggesting a stock out by any means, but there's certainly not the excess buffer or cushion in the supply chain at this time. So that's going to keep some upward pressure on price going forward. Couple of other things. This is just a snapshot of the South Dakota cattle inventory situation. And this goes back to the numbers here reflected are a comparison from the 2022 Census of Agriculture. So there have been county level estimates put out by NASS the last couple of years for cattle at the county level, but the Census of Ag is the last comprehensive or the most comprehensive look. So what we did here is we took the 2022 census numbers for here's all cattle and calves and compared it to the 2017 Census of Ag. So I've got a bunch of numbers going on here. The top number is just the inventory level. So up here in the Northwest counties, you've got 484,000 head, all cattle. So that's cows, calves, cattle on feed, it's all there. And then below it is the percent change from the 2017 census. So up there in the Pacific, in the Northwest counties, the number is pretty much unchanged from the 2017 level. In contrast, you come down to the southeast corner of South Dakota and that cluster of counties, really the bottom third of the counties in South Dakota, the inventory there is just 75%, give or take, compared to the 2017 number. So there's fewer cattle in South Dakota right now. And from the 2022 snapshot, I know it's a couple of years ago, but from that snapshot, it was predominantly in the southeast part of the state. And then you can see that out in the southwest corner of the state, the number was actually up a little bit compared to the 2017 census. So just a snapshot there to see what's going on spatially, where cattle inventories have been fluctuating big picture over time. And something that's been in sort of the news or circulating here recently is the pending loss of some of the NASS reports. Might lose some of those county estimates. That is benefit, or those county estimates, in my opinion, are beneficial to give some insights into inventories and yields that might benefit both operators and landowners. But the value of those at any given time is diminished if you don't have, if you've got sporadic or so few responses that most of your counties end up getting lumped together anyway or something. So if it's not good information, it's not valuable for decision making if you've got one county out of 4 in an area that's giving you or not giving you good information. The other pending report that's in jeopardy here would be the July cattle report. That's a balance sheet look at the national level of cattle at various classes. It's the first and only real estimate of the calf crop. So having an estimate of the calf crop only in the January report after many calves have been sold already is maybe not very beneficial. So having that July estimate would be very valuable from gauging how big inventories are of calf crops. And the other thing that would really be beneficial with that July estimate, it's a look at replacements, a snapshot look at beef replacement levels and dairy replacement levels. And it's also the only time where you get or the other time of the year where you get a snapshot of small feedlots. And as regular dialogue viewers are aware, small feedlots are prominent and important in South Dakota and neighboring states like Nebraska and Iowa. So those are another time of year where that snapshot is valuable. Didn't mean to include this, just an overview of the feeder cattle contracts, but for perspective, you've got the contract months, May, August, and then one that we'd use for calves would be November. Did want to show that the November futures price right now. So this is the blue line going across the top of this Bloomberg chart here. The November futures since the beginning of when the contract came on the board in late 2023. So back over here, we've got feeder cattle futures prices for November have been running at all-time highs all year, or really since the November came on the board. So for almost 6 months now, running ahead of last year's pace. That's the green line going across the top there. And started the year very close to where the 2014, 2015 prices were at. So same situation in the live cattle market. So both feeders and live cattle futures, generally all-time record high nominal price levels across contract months. Calf prices, 5 to 6 weight steer calves run through South Dakota AMS reported sale barns here. So this is just steers, 5 to 600 pounds. You can see here for the 2023 was a run of very high prices. Those knocked out most of the highs from previous highs from 2014, 2015 in that time frame. And then so far in 2024, prices got real close to $350 a hundredweight. They backed off a little bit. I was unable to grab the chart or the price for this last week, but I just want to show big picture that you've got these high prices out there. And from a basis perspective, stocker cattle basis, so the 5 to 6 weight steer price, finished the calendar year 2023 with very high basis levels, 50, 60, close to $70 a hundredweight. So if corn continues, as Jack might allude to, if corn continues to stay low or reasonable and fed cattle prices stay high, I would expect to see stocker basis October, November, December of 2024 to be similar to last year's levels, and certainly would be using something like a $50, $60 rather than the longer 5-year average level. One other marketing aspect that continues to be very very positive or strong would be livestock risk protection. It's a time of year where you might be looking at doing some price protection. So if you've got high futures prices, those would be attractive if you look ahead to November. So what's been happening, the U.S. and South Dakota, here's the long run trend. So for the longest time, very low volumes of cattle would be insured. But then as they increased the subsidy rate on these products. You really saw an uptick in 2023, the last full fiscal year. 4.2 million head were insured across the United States. South Dakota had about 400,000 head. And then this 2024 number, the very last bar here, that's only reflecting sales for the fiscal year to date. So that would be from July through about April 15th. So that's about 3/4 of what one would expect to see. So I would expect to see about 6 million head of cattle insured with LRP before the end of the fiscal year. What does that look like? Well, we've got a few sets of expected end values with a marketing time frame. So selling cattle or planning to sell cattle in November. So over on the far right, we've got the feeder values that's roughly tracking the futures price. And then if you take off the cost, the subsidized, highly subsidized cost for the insurance, you get a floor price. So right now, a feeder coming off grass late in the year, you'd be looking at a floor price of $240 off the futures price. So you'd add a basis for South Dakota on a heavier steer. You could add that on to the 240. The calves would be the 5 to 6 weight steer value for the most part. So they're adding 10% to the futures price. That gives this expected end value 275 right now. Take off about $8 for the coverage, and you're looking at a floor price of 265. That would be before any. You'd also have to factor in what you'd expect to see for basis. So a very attractive floor price available right now. The unborn calves just takes a weighted average of steer and heifer values. So that's why that price just cuts or splits the difference between the calves and the feeders. And one last thing with the with LRP tends to be, or looking at, especially nationally, just the average or backing out what are producers paying. They tend to be buying a very high percent of coverage, so they're not getting the highest level of subsidy. They're actually giving up some subsidy to get a higher coverage level. And it would suggest they're using the highest, like 95 to 100% coverage seems to be the most popular. Did want to throw a quote in here, ties in with some basis or some volatility stuff. That's volatility to the options trader is as important as basis is to the hedger, and is hard to anticipate. So where do we find information about volatility? Well, a good tool these days, and one I've been tracking recently, would be the CVol, and I don't know what C stands for, but the vol stands for volatility. So here's the recent last 6 months of feeder cattle volatility. So that volatility, if we'd go back 6 months ago and talk about October, November, the earliest part of the chart here, you had very low volatility. It was under 15%. Then in December, as fed cattle prices had their drop off and then increase, the volatility jumped up to 25%. Since leveled off, but then got up to about 20, and currently is about 15. So at the moment, volatility is not very high. It's up a little bit compared to its lows. Here's a longer run look. This is the last 5 years. I also overlaid the live cattle volatility on top of this. So volatility right now is fairly low for both of these commodities. And I threw in the late spring of 2020 in there. That's when the COVID shutdowns were dramatically affecting the livestock markets in particular. And that's where we had volatility at that time close to 60%. So just for perspective, and you can see the longer run view there. You want to do some things when the volatility is low, and we're back towards one of those time periods right now as well. So it's not cost prohibitive to do some of the longer run risk management strategies. Continue to have that basis information available on the extension webpage. And I continue to write every few weeks for the Livestock Market Information Center. It's a newsletter that comes out weekly called In the Cattle Markets. If you'd like some LMIC access, there's a I believe the current username and or guest username and password, but that changes frequently. So if that doesn't work, you give me a holler and we'll set you up with the right information. Here's my contact information. And because we got other speakers, I should probably wrap it up. So that is the end of my prepared remarks.
Okay, so since Matt does have to leave early to get to class and teach some of the students up there on campus, anyone have a question that they want to ask before we let him go? And as we kind of look for your questions, Jack, if you want to start pulling your presentation up.
Sure. Matt, are those, when they're the reports, are those scheduled to not be available this year?
Yes, that would be for 2024. So they would just you won't see county level estimates for say corn yield and cattle inventories or beef cow inventories at the county level, and those have been very spotty the last few years anyway. So the county level thing is an issue, but then the July mid-year cattle inventory, they're talking about not having the July of 24. So that would be, that's happened because of budget issues in the
Sure.
past, and they're a headache to kind of try to say, well, now how do we guess at some of these calf crops and inventory levels? So it adds inefficiency to the market. You can't make as good of decisions, and it's going to cost the cattle sector, the cow calf producer, and landowners and feedlots are all going to have to wrestle with less certainty about numbers and what might be out there for them.
Sure. Any other questions for Matt? If not, I'll go. Thank you, Matt.
You bet.
So Jack Davis, the crops business management field specialist out of Mitchell office, just going to share a little bit on outlook today. And looking at this one, this slide just wanted to show if you woke up yesterday and decided, man, today's the day to price, this is kind of where you would have ended up with local bids and the costs that I have listed. So with those rents and those costs, not real good returns. And we know not everybody went and priced on yesterday's deal. So kind of at the bottom then shows total cost as we have it listed here and what it would take per bushel to cover those costs. So just wanted to highlight that a little bit, and we're going to talk about let me go forward. There we go. Kind of the reports that came out at the end of March and our ending stocks and planting intentions. So here is for corn, looking at our ending stocks or not ending stocks, the stocks as of March 1st, I should say, and the percent that is off farm or in town, and then the percent that is on farm. And one thing that was kind of interesting that it was right at 61% on farm, and that's the largest that has been in the last 20 years. I'm not showing 20 years, I'm showing 10 here, but it is the largest percentage that has been in the last 20 years. So that was kind of interesting, and it'll be interesting to see if as this amount of storage that has increased on farm, if farms can market like to the end users, such as the town or the elevators can. So that'll be interesting as we go forward and how that is handled. And surely some of that is priced. Uh, it's if we took a price compared to last year at this time or this week on corn, we're down about $2.63 a bushel. So a big, hopefully most of that is price that's on farm, and not all of it is at risk. So here's just looking at the same thing for South Dakota. And it's not on a line, kind of right in that. It is up a little bit from recent years, but still kind of right in around that average for South Dakota. And then looking at soybeans, uh, it was up a lot from last year. I would say part of that is just we have more beans on hand, but more of it was also stored as a higher percentage on farm also. And again, looking at it for South Dakota, it really varies quite a bit, but still kind of, if you did an average, if you averaged them out, it's right around that average. So taking a look at prospective plantings for the year coming up, this would be our March intentions, and then compared to our June acreage. So June would be the acreage reports from those past years, what actually got planted, and the gold line or yellow line is our March intentions at each year. So what was intended to be planted. An interesting thing on a national basis is that we're 6 million acres less intended compared to what last year's June acreage was. So if we're thinking bullish, this may affect that in that we got room to pick up acres. So if our season, and we'll see what Laura has to say, that if our planting season for corn is good and ends up good weather, we could pick up some more acres than what our March intention had for us. So I just thought that was interesting that currently we're about 6 million acres less for intentions. And here, just looking at those different ones for the intentions. So compared to last year's actual, we had almost 95 million for corn on a national basis last year. Intentions are for about 4 million less acres this year. And again, we'll have room to probably pick some of that up if planting it, weather goes well. You know, with less acres being planted, that's a bullish factor, but there's just been a demand deal that's just really held our price down for corn and soybeans. On South Dakota, just really following the national trend compared to what we did last year. We also have threw in hay. As far as acres in South Dakota, hay is probably our third most used crop or most planted crop. So just wanted to highlight the hay. On a national basis, down just a little bit. And this would be production at this time is what is released or surveyed for the hay crop. And this is all hay. And in South Dakota, that production acreage is considered to be up or estimated to be up. I think on our hay price, it's somewhat reflected of this, that where we have an ample supply or better than it was a few years ago. And last year, we had a really nice winter for wintering livestock, not as much used probably, and we'll see that later on in the year. And I think to a certain degree, some of those hay prices have started to reflect that in not the increases that we saw last spring, and also maybe some decreases. Soybean acreage on a national basis estimated to be up just a little bit. And again, all will depend on weather. I think some of this on a national basis was anticipation of the additional plants that are coming online for the aviation fuels and the renewable diesel industry. Might be some of what's guiding those intentions. And South Dakota pretty well following the national trend. So kind of a busy chart, but just looking at our planting progress as we're in the early stages of this. And what I did was went to 5 years, and I picked the slowest in the last 5 years and the fastest. So the fastest was 2021, and the slowest, if you remember, was 2019, when we had all the prevent plant and issues during 18 and 19 with the wet years that were there. It's not a big concern as we're early in the season. And this report, of course, comes out on Monday afternoons for the previous week, or as of Sunday. Really right at that 5-year average. Doesn't really become a concern probably till we get to this middle of May timeframe. So in that 512 to 520, definitely would like to see that above 50%. And as you see in the 5-year average, it's probably closer to 75 as we get towards the end of May. But that's when that will start to have an impact on markets. And with our large carryover that we have in this 23 crop, it's going to take something as a weather problem to impact our price from a supply side. Our demand is it's slow. There's not large demand issues, and we have an ample supply to carry us through the 23 season, until we get to that new crop. So it's weather scares with that large inventory will have to probably prove themselves out to really affect the market. On the other side of that, on market, the funds are carrying a large short positions in both the corn and soybeans. So if we do get some issues through the growing season, either planting or growing pollination timeframe, then there's a good opportunity that it would take a pop as funds find themselves maybe on the wrong side of the market. This just is December contract from June of the prior year. So we go back to June of 23 and for this and through this week. So I just wanted to do a comparison of 2014 and also I'll do 2019. But yeah, we'll see. And Laurel, I don't know that we'll have a planting issue, but the next few weeks will kind of tell that. And you can see there was kind of a rally in 14. Still probably time for that spring rally, but it's running short. Just throwing in on the same graph, 2019, I don't worry about the price so much but when those rallies started to happen, probably more of the time frame. So middle of May, in 19 started to realize that there were some planting issues, and then it took a pretty good size jump percentage wise. So just some things to think about, that there's still time for a weather rally, but those are hard things to take to your banker and say that we're relying on this weather rally. Same thing looking at soybeans, and it, again, just picked 14 as a year coming off of say 12 and 13, very similar market wise to 22 and 23. And so I thought, well, let's see what it does for 14 compared to 24. So just kind of a perspective. Again, planting depend on whether there's any issues, and soybeans then probably weather more important towards the end of the summer, that later July, August versus corn, which is usually the end of June, beginning of July, when the most of the pollination takes place in the nation. And then just threw in 19, and it was really slow for market to react in 19 and realizing what had taken place with the amount of prevent plant both in South Dakota and nationwide. And part of that, not much of a reaction was due to the amount of stocks that we had both for corn and soybeans on hand coming into that 2019 year. So just a few things on corn. This would be this starting out on the May contract. From its low on February 26th, March 12th, it went up 40 cents. Now it's kind of stuck in that range of 430 to 445. And like I said, there's time for planting. The planting window rally is running short. We probably got about 2 or 3 weeks left on that. And then if that doesn't take place, then there is the chance for the summer rally depending on weather. Ethanol stocks are about 3% above last year. They had been doing pretty good, but we'll see if where that ends up. Exports are ahead of last year's level. A negative factor would be the dollar index and putting pressure on corn. Or upside, 495, 510, and the downside probably that 410. I think if we think back to that 14-15 time frame, or let's say 14 to 18 time frame, corn really went down to that reference price, and reference price was at 370. And the futures really kind of went down to that and then bounced off of it, would hover around that. Our new reference price due to the last few years is $4 on corn. So maybe that $4 level will stop us and we won't see a 3 on the futures side anyway of corn. Soybeans slow, and really just the amount of exports that are coming out of South America. We had a commitment to China last year at 1.4, almost 1.5 billion bushels. This year it's right at 848,000. And so Brazil has picked up, or South America has picked up a lot of that export market away from the U.S. The crush report was good, but we're also getting higher soybean oil stocks and also the meal. So as those stocks build, then the demand won't be quite as much. 1226 kind of the resistance. Again, funds have that large short position. So if something happens on our weather side, it could be very quick and volatile at that time. think that's what I have. Yes. Contact. So I think we'll probably hold questions till after, and if Laura's ready, we can go.
All right,
Thanks,
I'm
Jack.
ready. Oh,
Yeah.
go ahead.
Just gonna say, Laura, when you're ready, take over.
Okay, I think I'm ready to go. So you have a bit of information here. I haven't visited with you all since December, and I don't know that I'm on the schedule again yet. So I'm going to recap a little bit of what has happened since I saw you last in December, the last four full months, so December through March. Here's where we were on temperature over that winter season. Maybe no big surprise, but we have about 129 years of climate record here. This is from the NOAA National Center for Environmental Information that keep the climate records for the country. And you see these rankings of every county. Out of 129 years, you see a handful in the east that were ranked 127th, 128th. That's looking at second or third warmest winter on record. So most of that was driven by December, where we had 10 to 12 degrees above average across eastern South Dakota. January is kind of near average, but then February and the first half of March were again very warm. Top 1 to 5 warmest Februarys on record. So like a couple others have alluded to, very mild winter by any measure. Precipitation, a little bit of a mixed bag. We're starting to see a little, and this is again December through March. And you can see the colors there. Some of the counties in the west are the driest third on record. Some counties in the east, wettest third on record. A couple top 10 percentile, rather 10th percentile, which is kind of surprising to me. It's really driven, I think, by a handful of events. We didn't have particularly consistent precipitation, but December, that Christmas storm was a big deal. And then later March, we had a wetter period, but some of those areas of Southwest caught a couple more snow events in January, early January, than the rest of us did. So we're starting to see a little bit east-west difference here over winter. Again, winter's our driest time of year, though, so a little goes a long way. And if you're short on moisture, it might not mean a whole lot, but we have seen up in the northwest corner some pretty dry conditions over the winter. Here's where we sit with the drought monitor currently as of yesterday's map, and this data goes through Tuesday. So they did include some of the rainfall that we got earlier this week, but maybe not all the final numbers were in at the time of when they were collecting the data for this. So we are seeing kind of lingering dryness in the east, and I think again after next week's map they may reevaluate that based on the more current rainfall totals. Out west, I know there was a big event over the weekend in the northern hills, a Bell, Foose, Spearfish to Rapid City area, but that primarily missed any of the areas that were colored in yellow or brown there. So northwest area is still kind of dry, and as you look further west, into Wyoming, Montana, that area expands a little more to the west. Most areas in between, though, drought-free. So currently only about 6% of the state in any level of drought at the moment. If we look back to last year, though, quite a bit different picture where we had a lot of areas in dry or drought conditions. By dry, I mean the yellow areas. And last year this time, we were kind of coming out of drought. In the winter, we had quite a few areas that were severe drought category. And this time last year, we were kind of looking at some improvements if you look back a year ago now, we still had quite a bit of snow on the ground. We were starting to see some melt, but we still had quite a bit of snow and very cool temperatures, a very slow start to the planting season on the crop side. So a lot of that was starting to get reflected in the drought monitor as far as moisture goes. looking at overlays of drought areas from the drought monitor into a couple of commodities, and all these maps are found at the U.S. Drought Monitor website. They have a category there called Ag in Drought, and you can go see these for all kinds of commodities, you know, the grains, cattle, livestock, all kinds of things. But I grabbed a couple here. This is areas of corn in drought. So the red hashed areas are anything on the drought monitor that was D1 or worse, so the moderate drought category or worse. The dark green areas are the major crop growing areas, and the light green are the minor crop growing areas. Again, this is for corn, very similar for soybeans here. You know, we're not seeing much of the South Dakota corn crop in drought, but you look at our neighbors, you know, in Iowa especially, I should have focused on that a little earlier. They still have D3 severe to extreme drought in parts of central to eastern Iowa. So they're still holding on to some severe areas, even though they've had some improvements. So looking more broadly here across the Corn Belt region, that's really the area that's really suffering the worst currently as far as drought conditions go. So about 23% of the nation's corn growing area is in some level of drought. I grabbed sunflowers. I know we're ways off from sunflower planting, but just to give a snapshot of a different commodity, a different crop, you know, very little area of sunflower in drought at the moment. You know, so there again, you know, if you're looking at different commodity markets, these might help you at least give you a snapshot of what areas are maybe a little worse off in the drought condition than others. Looking at alfalfa hay, and I think Jack or somebody else talked about this, like this is a huge commodity here in South Dakota. And as I showed in the drought monitor area, really the northwest, far northwestern corner is the area really suffering from drought. I should add that that drought area was introduced in the winter season. So something like what we might call a snow drought, where they missed that big precipitation event over Christmas and a couple other things. And earlier it was more of a recreation tourism issue, but now we're looking at, you know, soil moisture and other things that are kind of residual impacts from lack of snow in the winter season. And they continue to miss on some of the spring rainfall. So, but looking statewide and even region-wide, if you include both the Dakotas, you know, northern Nebraska and so on, very little alfalfa hay area in drought at the moment. April is a critical month for moisture for this crop and pasture and range as well. And so, so far we're looking in pretty good shape, you know, as we're improving, getting out of drought or dryness conditions in general, and kind of maintaining or gaining soil moisture. So I'm optimistic at this point that this crop at least has a good start at the moment. Jack showed something similar as far as planting progress for corn. This is a combination of crop progress, crop condition from USDA. This is for winter wheat, not corn. To show you kind of something different. You know, it's kind of been a moderate start. You know, we had a really warm early March, but then it was cold that kind of week of Easter, if you remember. And then we've kind of had some warm periods in between, but kind of hovered, kind of moderately. You know, saw some really warm temperatures over the weekend last weekend, but you know, we get warm and cool and warm and cool, and so we haven't been consistently warm. So you know, there was, you know, if you, in my circles, you know, a couple months ago, we were really kind of wondering, gosh, is this another like 2012 warm season, you know, drought coming on? And no, that hasn't happened. Things are kind of on par here with kind of average. We don't have, you know, our snowpack melted early, but crop condition has been pretty good. And so we're looking at winter wheat at the top here, 2024, how it ranks the last, you know, compared to the last 4 years, so looking at the last 5 years, I guess. You know, best crop conditions since 2020. Very high percentage in the excellent to good condition, and down at the bottom, you know, very little, if anything, is headed out yet. We're still the fields look pretty good though, from what I've seen around the region. Looking at, and that's just a snapshot. There's other crops you can look at there too. Looking at soils, one of the indicators of getting into the fields for spring planting. Earlier this week on Monday morning, I was looking at these numbers, and 4-inch soil temperatures were like in the 50 to 60 degree range. But looking, you know, knowing that this week was the end of the week was going to be cold. So this is what I grabbed this morning. So temperatures have dropped, you know, 5 to 10 degrees or more in some areas. As we've had, you know, sub-freezing temperatures across much of the area here. So things are still in that time of fluctuating. We're not consistently warm yet. So certainly small grains are going in, but I think, as Jack said too, you know, we've still got time for corn and soybeans to get in. You know, and this is kind of typical behavior for this time of year as far as temperatures go for soils. So I'm not too worried. People got anxious because the snow melted early in early February, but we still have time, and it's not too unusual to see the soil temperatures this time of year. Soil moisture, how much water is out there for us to get started. Again, I think we're in a much better position than last 1, 2, 3 springs, last 3 Aprils of this time. Everything's looking pretty good. We've gotten that recent flush with the rain last weekend. You can see in the northwest corner still, you see, comparatively speaking anyway, drier than much of the rest of the state. But all these blues look good to me. All the blue colors look good to me as soil moisture. So I think we're in the adequate, what I describe as adequate to good for soil moisture. We don't have, you know, much for excess moisture out there. I did see some ponding when I went down to Mitchell earlier this week, you know, going up and down 281. But again, I think that's pretty short-lived and nothing really to be concerned about at this point. But yeah, no major flooding really expected. So I think, again, getting crop in the ground is not what I'm worried about this year. Let's look at the climate outlook now. Looking at warmer than average temperatures coming through starting next week. And if you look at the forecast, you know, the average highs around this time of year in the upper 50s. Average lows are just above freezing in that mid 30s range around this time of year. So we're looking at warmer than average temperatures kind of returning for the last week of April. That's the map on the left. Pretty high confidence there through the central part of the country in that outlook. Precipitation on the right, though, also along with that, looks like you know, multiple chances of precipitation also around that time. And we start to see that already in about 1 week's time, or about early next week, around Monday-ish or so. We start to see kind of every couple of days, you know, some chance of rain in the outlook in the forecast. So looks like that's the pattern that we're going to see through the end of April into early May. What was just released yesterday was the May climate outlook, temperature and precipitation. Temperature on the left, first of all, slightly favoring towards warmer temperatures, just the far eastern part of South Dakota. Some of the other climate models I've looked at kind of show more of eastern South Dakota in that warmer area. But the rest of the state, equal chances of warmer, drier, or near average for temperature for the month of May. So nothing really extreme, I think, is the point there, either cold or hot necessarily in the outlook. Precipitation-wise, on the right, you see that southern, central to southeast part of South Dakota favored slightly towards wetter conditions in May. So could be continuing some of the trends that we see in April. May average precipitation is one of the wettest months of the year, so 3.5 inches or so for a lot of that region that's colored in green already. and so it's possible we could see some more gains on moisture there in May. So I think that's good news for pasture and forage, getting things started, kind of refilling stock ponds. I know some of that area on the southeast especially still is kind of running dry, not a lot of surface water, but soil moisture is looking good. So hopefully that rain will help when the row crops get in the ground as well. So as we look further ahead though, May through July, we see a little bit different story here with most of South Dakota equal chances, warmer, cooler, or near average for temperature. So no really leaning on temperature, either colder or warmer, and that's been pretty consistent in the outlook for that early summer season. On the precipitation side, on the right, again, not a lot of confidence in this part of the country, either wet or dry. Not too unusual to see that in the summer as we get a lot of that local thunderstorm type activity. So it's a little more difficult to forecast there in that time of year. But like I said, that's among the wettest time of year. So even if we get near average, I think that's good. And timeliness is probably going to be more of a factor than anything. As we look out further ahead, though, we start to see we're ending El Nino right now, which has kind of been the big story of the winter, and we're transitioning into La Nina conditions, which is what we've seen the last 3 summers and what has been a factor in bringing drought to our area. And as we see a rapid turn towards La Nina conditions in mid to late summer, potentially going as far as a moderate strength event, which is pretty strong for a summer to fall. We see a transition towards warmer and drier, and here on the right, that area favored to be drier from Canada all the way to Texas. All the Rockies and Plains region pretty much included in that area. This has been pretty consistent the last 3-4 months at least in the outlook for summer, and so they're seeing this signal very consistently in the climate models. So looking at potentially wetter start, depending where you are in the state, wetter and warmer, to kind of maybe more moderate temperatures, early summer, little uncertainty in precipitation, but then as you get late summer, this is July through September, ending on a warmer, drier pattern. And so again, like Jack said, I don't think we have a problem starting the season. It's a matter of how are we going to end the season, and are we going to have issues with pollination, grain fill, those kinds of things late summer. And we'll cut some of the grazing season short, anything like that. Grass cast, this last thing I have to share with you. This is a great new, kind of newish tool to look at potential forage production. And this is just updated on April 16th. So this looks like at the whole grass season through the end of August. The middle map is if we have from now near normal precipitation for the season through August, what will our forage production be? And looks like generally good news there with the blue and green colors near to above average, potentially, even if we just get normal precipitation for the rest of the summer season. On the left is if we have above normal precipitation, and on the right is if we have below normal precipitation. So you kind of get a range of scenarios there to plan on and to think about as far as pasture, forage, grazing conditions. So a pretty neat tool there. And that's all I have, Heather. We're just 1 minute over, so I apologize. But thank you for your attention today. Hope you guys have a good start to the spring.
Thank you, Laura. We greatly appreciate that presentation, and to Matt and Jack as well. And thanks for everyone for joining us today, and to those watching online. If you would fill out the survey that follows the presentations, there's a link there that you can click and find that survey. So thank you again, and we'll do it again in May.